Welcome to The Explainer. Today, we're going to pull back the curtain on something we all use, but very few of us really understand: how money is actually made.
We use it every single day. We earn it, we spend it, and it just feels solid, right? It's this reliable, predictable thing in our lives.
But the system that's running behind the scenes, well, it's both incredibly powerful and surprisingly fragile. And to really get it, you just have to make one single mental shift. It's this little change in how you think about it that makes everything else just click.
And here it is. This is the big idea. Banks are not just vaults that store money. Think of them more like engines that create it. And the fuel for that engine? It's credit. Once you see it that way, everything else, from inflation to financial crises, starts to make a whole lot more sense.
All right, so let's pop the hood on this credit engine. Let's pinpoint that exact moment when new money is born.
Okay, so for most of history, money was a physical thing. Gold, cash, stuff you could hold. It was limited. But that's not our world anymore. Today, most of the money out there isn't physical at all. It's digital. It's really just numbers on screens, and those numbers are created by the banking system itself. So, how is this digital money just created out of thin air? It's a great question. And the answer is actually found in a moment that is super familiar to a lot of us. It's the moment you take out a loan.
Now, here's the crucial part. The bank isn't reaching into someone else's savings account and moving that money over to you. No, when your loan for, say, a house gets approved, the bank does something amazing. It creates two new entries on its books. One is the loan, which is an asset for them. The other is a brand new deposit in your account. And that deposit, that's new money. It literally did not exist a moment before, and now you can go and spend it.
So, loans create deposits. Credit creates money. That right there is the fundamental secret of modern banking. The whole thing works simply because we all agree to treat these digital numbers as if they're real. It's a system built on collective belief.
Now, this system, it's incredibly efficient, right? It's what fuels so much of our economic growth. But that efficiency comes with a price. There's a hidden vulnerability baked right into its design.
And to see that vulnerability, you have to look at what's at the heart of every bank: a simple balancing act called a balance sheet. It's basically just a list of what the bank owns versus what it owes. And this is where the whole system's tension really lives.
And here's the critical mismatch. On one side, you've got the bank's assets, things like long-term mortgages that get paid back really slowly, over years and years. But on the other side are its liabilities, and that's your deposits. And you can ask for that money back instantly, on demand. So you see the problem? The bank's money comes in slow, but it can be forced to go out fast, really fast.
So what does that mismatch mean? It means the entire banking system isn't built on piles of cash in a vault somewhere. It's built on something much less tangible. It's built on a foundation of pure confidence. And if that confidence ever shatters and too many people ask for their money all at once, well, that's a bank run. And the system simply can't handle it.
Okay, so if this whole thing is built on something as delicate as trust, who's in charge of making sure it doesn't all just collapse? Well, that's the job of the central bank.
Think of the central bank as the manager of this whole system. Their job is to work behind the scenes to influence how fast that money creation engine is running. They're there to maintain public confidence and, when things get really bad, to step in and act as a lender of last resort.
And their number one tool for doing this? Interest rates. It's basically the system's accelerator and brake pedal. When rates are low, it's cheap to borrow, so people and businesses take out more loans and more money gets created. The economy speeds up. When rates are high, borrowing is expensive, so it slows way down.
And this isn't just some abstract financial game. This constant speeding up and slowing down of credit has very real consequences for all of us. It's what we experience as the boom and bust of the economic cycle.
And this cycle has a pretty predictable pattern. First, you get the expansion. Credit is easy, lots of new money is being created, and things are growing. Sometimes that leads to a bubble, right? When all that new money starts chasing a limited number of assets, like stocks or houses pushing prices up. But eventually, something breaks. Confidence shatters, a crisis hits, and the whole cycle just slams into reverse.
And here is another key idea. Just as taking out a loan creates money, paying a loan back, or even defaulting on it, destroys that money. It just vanishes from the system. And that's why during a recession, it can feel like money is literally disappearing. Because, in a way, it is. Once you get this, all those headlines about inflation and deflation start to make a lot more sense.
Inflation? That's often a sign of too much new money being created, chasing too few goods. And deflation, which can be even more dangerous, is what happens when money is being destroyed faster than it's being created.
So all of this, it brings us right back to the most important and maybe the most unsettling idea of them all.
See, the money in your bank account today isn't a fixed physical thing. It's part of a dynamic system. That balance isn't a pile of cash with your name on it somewhere. It's really just a promise within a huge interconnected web of other promises, all those loans waiting to be paid back.
And when you really see that, the whole world of banking stops feeling so mysterious. You realize it's just a system built on human behavior, on incentives and consequences. The only reason it holds together is because we all collectively believe that it will.
So if our money is really just a system of trust, what does that say about the foundation of our entire modern world? It means that this massive, complex global economy, with all of its power, ultimately rests on the most human element there is: confidence. Confidence in each other and in the system itself. And that's a system that shapes our lives in ways much deeper than we usually think about.